Good morning, Manoj. How are you?
I'm good, Mukund. How are you?
Excellent. So I just wanted to quickly go through. Happy weekend, everybody. Happy long weekend. Sorry we weren't able to get to it on Friday. I was traveling, so it was a little bit harder. But I appreciate you guys watching the video today. We're going to go through a quick review of last week. How are the markets shaping up? And then talk a little bit about earnings. So first, let me start with the earnings themselves. There were two earnings. There were actually two out of nearly about 8 earnings that I was watching that were very, very good. I'm going to go through both of them. The two that were good were NCNO, one of the companies in the software space. Really, really good earnings. They actually announced, as you can see, a 30% beat on EPS and a 2% beat on revenue. And the stock is trading at a fairly decent valuation. The company is about 3 billion in market cap, and on a revenue basis, annualized revenue LTM, they're doing about 450 million. So valuation is decent. It's in the somewhere in the 8x range, EV to NTM. But the good thing is, after price stock action, look at this, Manoj. It's actually a very nice green, beautiful candle on the daily.
Right.
And then
I've got sideways breakout.
yeah, and on the weekly, if you look at the weekly, it's actually now trying to break through a lot of the weekly supply zone. So I think this might be a good one to watch. So this is a supply zone right now, the 32 range. It seems to be in that range. Looks like it might be able to break out, but watch for that. If not, unfortunately, it becomes actually a distribution zone. As you can see, it actually becomes a triple top. So watch that on the weekly, but on the daily, it looks really strong. What I mean by that is it's probably going to create a flag pattern or a tenet pattern, bull pattern as it goes up, and then take a little bit of a breather and then move up again. So NCNO was a good one. And then IoT, which is Samsara, also on the daily, very beautiful bull flag. So I think green power earnings gap. I really like the stock. They've had terrific earnings as well. On the weekly, the stock is looking fairly good as well. It's literally a W pattern. So down, up, it actually goes very well. I think it'll probably do very, very well going forward. So watch for these two. Other earnings, CRM was good. I didn't think it was great. So I kind of didn't follow that as much. CRM was actually good earnings, but stock performance was okay. Sentinel One, decent earnings. Stock was okay. Okta was another good one. CrowdStrike and MDB were also good earnings, but I think the stock have run up. The two stocks have run up quite a bit, so they're going to take a little bit of a breather, is my sense. But NCO on IoT, Samsara and NCino, good stocks to watch. So let's just quickly do a review of what we have done overall for the week. Manoj, how are we doing in terms of the markets, how they did last week, and how do you think they're going to continue to
Sure.
perform?
Let me just start with SPY, which means ES first. Okay. So I need to start with the hourlies first, 1 hour chart, and then we move to the daily and the weekly. And there is a reason why I'm saying this. So all the key index futures, which is ES or NQ or YM or RTY, all of them have created a rising wedge. Rising wedge and in fact breakdown as well. But there is one more pattern which is forming, which I've just noticed right now while I'm on this call. It is a diamond as well. Diamond top on the hourly. Not a, again, not a healthy sign. So rising wedge breakdown is not a healthy sign. And then if it breaks down of this diamond top, that is also not a healthy sign. That's one key aspect. And if we move away from hourly and we go to the daily, let me just remove all the drawings first. So this is a gravestone doji. Gravestone doji or a inverted hammer, these are bearish candlesticks and not a healthy sign for anybody who is wanting to buy into the market. So hourly as well as daily are not giving any healthy picture. But if you go to the weekly, it doesn't give any sign of panic as of now. As I've been saying for the past few weeks, this market has been driven by the weekly candles, weekly charts. This bounce back of the 20-week EMA and for the two candles and the way it is sustaining I wouldn't be very, very bearish. Maybe the hourly gives us some breakdown and then market gives maybe 50 or 100 points down on the ES. But after that, we will see whether it wants to go down further or not. Right now, it may not go down further, maybe 50, 70, 100 points. And after that, we will see whether it wants to go down further if weekly gives us any clues. Hourlies, 4 hours, and daily charts are bearish, not the weekly as of now.
So I think one of the things that I was looking at also, which I noticed, was the markets are definitely a little bit overextended in the short term.
Yes.
Long term, it still looks very, very strong, meaning this is a good pullback and it should rise back again. But September, remember, is also a tough month overall. Historically speaking, Septembers have always been one of the worst in terms of stock market performance. But yeah, I think we are extended definitely in the short term, meaning days, hours, but not necessarily in the long term.
Right. Moving away from the ES, now we go to N2, which is QQQ. Again, similar thing. It is broken down of the rising wedge on the hourly chart, forming similar diamond pattern here as well. So I would be very cautious of this diamond because diamond tops are not a healthy sign, especially after rallying from the bottom. If it is forming a diamond, it's not a healthy sign. So I would, again, these are, so whether we call it diamond, whether we call it a flag, or whether we call it a rising wedge, these are all signs of consolidation after a long run. If it forms a high base, that's a healthy sign. But if it forms a bearish flag or bearish rising wedge or a diamond, that's not a healthy sign. So it is not a high base. It is a diamond. It is also after the breakdown of the rising wedge. I would be very careful in holding my longs there. I would rather be creating a short position when I get an opportunity to, but I would definitely not be long, especially in the short term, maybe not for 1 or 2 days. After that, we'll see whether, daily or weekly chart gives us any other clues. But hourlies and daily chart does not give us any bullish sign as of now.
And also, even the hourly and the daily chart to me are not long-term bearish as well. Absolutely. So it's not like you can take a position that is short and really not worry about it for a week or two. This is one of those markets where you want to play it very, very safe. If you want to play it very safe, I think the best thing to do is to watch carefully. Right. And if you want to take any positions, be very quick in those positions.
Absolutely.
Day trader,
even if you take short, get 20, 50 points, 100 points max, don't hold beyond that. 100 points maximum on the NQ and maybe 20, 40 points on the ES. But beyond that, it is risky to hold your shorts. So I would have shorts and then exit as quickly as I can.
What about the rising wedge? Is the rising wedge bullish or bearish? It seems like it's...
Rising wedge is a bearish sign and falling wedge is a bullish sign. So bearish, bullish. So when rising, what does a rising wedge indicate? It indicates that the range is narrowing at the top, which means the bulls are not comfortable holding on to the long positions that more markets rise. And hence, it is always a sign to get out of the positions if you are holding longs.
Got it. Okay. That's with the NASDAQ. We did the NASDAQ and the SPY. How are we doing on the Dow Jones?
Dow Jones has, so as I've been talking in the last few week calls as well, earlier this rally was, led by the industrial stocks. It again started rallying and then again started petering off. Now it is leading us to the downside. This downside was led by industrial stocks in the last few days. And again, it is broken down much before all the other indexes have broken down. So it's a sign that you want to keep an eye on. So if Dow Jones breaks down, and if also small caps also give a sign of breakdown, you really want to be careful. So this is my first sign of being careful. It has broken down of the rising wedge 1. It is also forming a descending triangle on the hourly. So next 2 days for me is cautious because 1, it is broken down. 2nd, it is also forming a rising wedge. I would definitely be very, very worried if it breaks down.
It is also
testing again, weekly is not bearish. Daily is, but weekly is not bearish.
It has also been testing the 34,825 range 3 times. If you go back to the hourly, right?
Why is that? So because that's a 20 EMA and 50 EMA both. So that is the reason why we have to be really, really careful if it breaks down. On the weekly, again, 20 to 50 EMA on the weekly as well. So definitely you want to keep an eye on Dow Jones first before you jump into your longs or shorts on any other indexes.
Okay. How are we doing in terms of Russell 2000?
Here we go, understand. This is the weekly chart. 20, 50, 200 EMS, all right there on the weekly. I am watching this far more closely than any other index stocks. Why?
When
Because
you're watching it, what
factor
is
of, I'm sorry.
when you say you're watching it more closely, is it because it indicates something, or is it because you're looking for a trade?
Many things, not just for the trades, but I mean, for the last 15, 17 years that I've been watching markets, even if we want to, be long on the large caps, small caps have their own indications of giving us a clue what market holds. So when markets rallied here, it had broken out of a particular range. It had broken out of a trend line. It broke out, then gave us a false breakdown, or maybe false breakout. We don't know as of now. And let me just bring all the drawings first. So here you go. So this was the trend line that it broke out of, but then again gave down very quickly, and now it is exactly under this trend line. So whether it was a false breakout or whether it is a false breakdown, we will know in the coming week. Because not just this trend line, but also the 20, 50, and 200 EMAs are right there. So the reason I said that why small caps are more important for me is when small caps start participating in a rally, not just large cap lead, small caps also lead, because it's a healthy sign of overall participation in the market. But when small caps give up, they are the reasons why they would also take down other stocks, other indexes with them.
Yeah.
This key 3 or 4 weekly, red candles is a very negative sign. We rallied again after this thing. This is a big green candle. Now this week is far more crucial than any other weeks, because it is just exactly under the big trend line. Apart from that, it is just above the 20, 50, and 200 EMA. So I'm watching it far more closely than the ES and NP. And of course, YM is leading us as well. So YM and Russell are the reason. Dow Jones and Russells are by my key, on watch, rather than any other indexes or any other stocks.
Got it. Okay. Very cool. That's
Give me 1 second. I need to also show you the hourly chart of this. It has also broken down of the hourly pricing wedge in the last 4, 5 or 6 hours. It has just broken down. When the futures opened, it broke down. So I'm careful and I'm cautious.
Somehow it seems on the hourly, it always tries to create a green candle, strong green candle, form kind of a pennant, lose it. Strong kind of a pennant, lose it. 3 times.
Right. It does.
Yeah. Okay. All right.
Yeah.
That's with the Russell 2000. We have a couple of stocks. Okay. We were definitely watching the 10-year yield is at 8.4, 4.1. Sorry, not 8.4,
Yes.
4.1.
So it is still inside that channel. It is still under the double top, and it is just above the 20 EMA and above the 50 EMA. So this is the key area from the point of view of whether yields want to rise up again or whether it wants to give up. I would say maybe it will make another higher high somewhere around here and then come back down, because from the daily as well as the weekly, and apart from the macro point of view as well, it doesn't have any signs of keep going up, because what we saw in the last week after the NFP data, even if markets gave up, even the yields gave up. Yields did not continue to rise. So that's a sign that markets are following the macros as well as the technicals very closely. So I wouldn't be very bearish on the 10-year yield anymore. I would rather be watching this channel, whether it wants to break down of the channel in the coming week.
Yeah, break down on the channel and also see if it continues to form that pattern because right now this one seems like more than anything else the rise and the down, the rise and the down. So I think it's still consolidating to a large extent.
Right.
But what you were telling me on the weekly, it was a double top. This one seems like a head and shoulders pattern if it moves down over the next.
It looks like possibly even right shoulder is still not formed.
Yeah.
This one is formed, head is formed, right shoulder is still to be formed. So probably it might make this coming week. It is similar to what we have been seeing in the ES, NQ, and the YM as well. All those key index futures have also formed head and shoulders. Whether it breaks down or not, it's a 50-50 call.
Yeah. Good. Okay. All right. We have a couple of stocks on our watch. I guess first one is Disney. That was one of the stocks that I think you were watching, right?
Yeah. Let me bring that back. Give me
What to
1
think of
second.
Disney, man? And I look at Disney and I think about Microsoft from 2000 to 2014, 10 years, 15 years of just going nowhere. Look at that really quickly. Just look at Microsoft long term. Just look at the Microsoft stock over all time. Go to the all period.
Give me 1 second.
Yeah, monthly candle. And look at that period between 2000 and 2014. It's just going nowhere.
Wow.
That was 2000 was when this was the peak of the dot-com bubble. Steve
Yeah.
Ballmer was CEO, and then a period of just consolidation, 15
I
years of
think from 2001 till about 2014, it went nowhere.
yeah.
Okay.
And then Satya Nadella becomes a CEO. You get one green candle. The candle on the right, 2014 candle on the right, that is a month that Satya Nadella became the CEO.
Wow.
And then it just nonstop, just up and to the right since then. See, there are no other beautiful green candles you can see to a large extent. But then the month he becomes the CEO, it just takes off.
Yeah. So
Disney
maybe it's the
is
same
something
way.
like that.
You're saying Disney is exactly the same way as Microsoft is?
I think so. I think there's going to be a period of consolidation. If you look at Disney overall, to me, there was a lot of consolidation. Bob Iger took over. He gave it a big run. Bob Chapek took over. He literally took the stock down. I don't think he did anything else other than take the stock down. So I think there's going to be another period of consolidation before. But anyway, what are the charts telling us?
Okay. While talking to you, I have drawn this new trend line, which is actually signaling a megaphone, and it is already broken down. And this is a monthly chart. Monthly chart megaphone breakdown is a very bearish sign. But at the same time, we have been talking about these two things. So let me just remove all other trend lines so that we know what we are talking about. Okay. So this 1, 2, and 3 trend lines are very important for me. This one gives the formation of descending triangle, which is a breakdown, bearish. But at the same time, if you look at the bigger red and the bigger green, that's a falling wedge.
Yeah.
So after this breakdown, we are probably heading somewhere around towards the lower end of the wedge, which is somewhere around 72, 73, maybe, or maybe 70s. This is where I would, start. So if I am a long-term bull, I would start building my positions between 70s, low 70s. That's based on the weekly candle. Monthly gave us a megaphone breakdown, which is not a healthy sign. But I would rather trust weekly for now, because trading monthly charts, like, you are thinking about next 5 years. Weekly is basically you are trading next 6 to 12 months. Next to 6 to 12 months, I would rather be, trusting the weekly chart instead of trading the monthly chart, because monthly charts, like one candle takes entire month. So you wouldn't be able to trade there. So I would rather start building my position somewhere around 72, 73, and then let's see how it goes from there. Because it's a weekly. One candle itself will take 1 week to form. So maybe next 1 or 2 months, it comes down to somewhere around 72, 73. And then after that 1 or 2 months more, it starts breaking out of this falling wedge. So that is the reason why I'm watching Disney closely. So next 3 months, probably by the end of this year, it would try and give us a breakout.
Okay, that was one. We wanted to discuss Qualcomm as well, right?
Yes. Here you go. Inverted head and shoulders. So before this leg formed, there was a big breakdown in the Qualcomm after the earnings last time. I was bullish right here because this head and shoulders, which is on the weekly, it was actually on the daily as well. So this and this third thing was somewhere here. I was bullish somewhere here, and this neckline was somewhere around here. I was bullish. I traded this, and I somewhere got out. Luckily, I got out here because it was earnings week, and after the earnings, it broke down. And now, from the daily, it has formed a weekly inverted head and shoulders. It will take few weeks before it, attempts to break out here. But till then, it is still forming this inverted head and shoulders. So I would say next maybe 2 months or so, it should try and give us somewhere around here a breakout and try and attempt a breakout. By then, maybe somewhere earnings will come out. But that's what it looks like.
Yeah, this is going to take a long while, Manoj.
Long while, 2 months at least.
The reason also, I think that, again, I tend to also look at the fundamentals and other macro picture. The stock chart is telling us it is inverted head and shoulders. On the other hand, next month, actually this month now, September, ARM has filed for an IPO. ARM is one of the competitors to Qualcomm. They are filing at an IPO range of market cap of about $50 to $55 billion.
Wow.
Is doing about $2.7 billion in revenue, not growing very much, 1% growth negative, but it is going to be, ARM is going to be one of the biggest things that Qualcomm has to worry about from a stock perspective. I mean, Qualcomm has a good position overall in the market, but ARM and Qualcomm tend to be number one and number two in the mobile. ARM is number one, Qualcomm is number two in the mobile market. They own it. ARM owns it. So given the amount of
ARM is it the Baba subsidiary or that's
no,
Ant?
no, no,
That's not
no,
ARM. That's
that
Ant.
that is Alipay. ARM is actually a company based out of UK. They were public until 2016, and then SoftBank took them private for about $32 billion. And then now they're listing again this month. So I'm not expecting Qualcomm to do great things for another at least couple of months until the ARM IPO pays out. Because a lot of people think if I'm not putting money in this, I'm putting money in that. There's enough competition with NVIDIA. If you want to do something in that space, NVIDIA seems good. ARM IPO coming, I'm not very confident about Qualcomm.
There's one interesting the thing that actually you brought my mind to. So what happens is whenever an IPO comes up for a particular space, the entire space starts buzzing up. So maybe that could result into stock maybe rallying for a bit depending upon what the valuation of that stock is, and then accordingly the stock might give some clues.
Yeah. Okay. The third one is Micron.
Yes. Again, similar pattern. Inverted head and shoulders on the daily chart, on the verge of breakout. I had tweeted about it somewhere around here, maybe, and I said that it is already, forming the right shoulder and should result into some breakout sometime next week. And it looks like it is on the verge of breakout. So I would keep a very key eye on this stock, and probably we should start trading as well once it breaks out. Currently, it's at 70 something, and once it breaks out, first line of resistance will be around 74, 75, and after that we can see whether it wants to go further up. Yep. Weekly, again, similar double top. So 74, 75 is the key area actually.
So it has to break the 74 range for it to be able to, it has to go past, break that resistance, right? Otherwise it becomes a triple top.
Yes.
But there is room from 70 to 74, I think.
Yeah. I think 70 to 74 is like, is good enough, 6-7% range. So I would rather be, trading this range from 70 to 74. That's good enough for me to make quick money within a week or so, and then get out and see if it wants to, rally again after that.
Awesome. Okay. Let me just quickly mention as we come to the close, a few earnings next week to watch for. 4 companies that I'm watching fairly closely because Manoj had actually put it on my list. Zscaler, I've been watching this company for a long time. GitLab, I have a position. AI, don't have a position, don't care too much about it. DocuSign is another company that is coming up with earnings next week. And the last company is Kroger. Manoj, you put Kroger on the list. Do you follow the stock?
I don't follow the stock very closely, but since we are talking about recession, and recession is the time when normally most of these consumer stocks, start giving some signs of whether they want to break out or whether they want to consolidate or whether they want to rally. And that is the reason I just wanted to see how because consumer stocks tend to perform good in terms of the recession. I want to see whether it has some signs for the markets in the next few weeks or months. That was the only reason I brought this into the list.
Yeah. I think after the Albertsons merger, Kroger has still been continuing to do very well, but I'm very keen because, when I saw the earnings this last 2 weeks, even in the grocery and even in the very low end, Dollar Tree, Dollar General are at multi-year lows.
Wow.
And Walmart is at an all-time high. Right? That was exactly flipped about 3-4 years ago.
What does that tell us? Does that tell us that consumers at the lower end of the strata are weak and consumption at the middle and higher end of the strata is strong? Possibly.
Walmart, I wouldn't call Walmart as high end for sure. At the high end of the market, when I look at the earnings of the companies that are luxury brands, they seem to be doing okay. So the high end is holding up okay, primarily because China for them has been decent.
Right.
Middle end of the market has been very mixed. There are some companies that are doing exceedingly well. For example, Abercrombie and Fitch had a very good earnings. But on the retail side, it's been a very mixed picture. Lululemon, again, I would call them a little more mid to high end. Very, very good earnings, extremely good earnings. So retail apparel is still holding up okay for some companies, not all. Five Below did okay. Boot Barn did very, very well. So there are some companies in the retail space, in the high end that are doing very well, in the mid end that are doing very well. But the low end, Dollar Tree, Dollar General, some of the grocers themselves are struggling. But Starbucks earnings were good. Walmart earnings were good. Kroger earnings were coming up, so I think they will be an interesting company to watch. Target earnings were poor, but that's because of poor execution from Target, not less necessarily what the consumer is telling us, I think.
Interesting. So we should see next week what Kroger says, and it has something to watch out for maybe.
Absolutely. Awesome, Manoj. Thank you very much. Thank you, everybody. Please subscribe to our channel, and I will see you guys next week.
Yep. See you next week.